Disaster recovery plans include mobile data centers and armored trucks, designed to withstand multiple regional catastrophes. During 9/11, BlackRock relocated critical systems within hours. Today's protocols are even more robust. Competitors have no chance. JP Morgan spent $12 billion trying to build a rival before giving up. As others license Aladdin instead of fighting a losing battle, BlackRock's tech lead grows yearly. The system optimizes purely for returns, buying tobacco or defense stocks without moral judgments if the math supports it. Future upgrades aim to see around corners better than any human, analyzing political developments and scientific papers for opportunities years before commercialization. What began as risk software now resembles a financial singularity, blurring the line between tool and trader more each year. The BlackRock revolving door. Here's something that would make any conspiracy theorist's head spin. The line between BlackRock and government has gotten so blurry, you need a spreadsheet to track who's working where. Former Treasury secretaries, Fed officials, even central bankers, they all seem to end up at BlackRock eventually. Consider this. Since 2000, 47 senior government officials have joined BlackRock, including 2 Treasury secretaries, 3 Fed presidents, and multiple European regulators. Meanwhile, the Biden administration alone hired 4 senior BlackRock staffers. This two-way pipeline gives the firm unprecedented access. The COVID bailouts showed how this plays out in crisis. When the Fed needed someone to manage its corporate bond buying program, they hired a BlackRock-run firm staffed by former Fed and Treasury officials. These were the same people who designed financial rescue packages, now implementing them for their new employer. One former regulator admitted anonymously, "We knew their systems. There wasn't time to train anyone else." Europe followed the same pattern. BlackRock got hired to conduct bank stress tests while simultaneously managing assets for those same banks. When bureaucrats raised conflict concerns, they were told no other firm had the necessary technology. Government contracts provide Aladdin with something money can't buy: insider knowledge. The system learns how regulators think during crises and gains access to non-public market data. This makes Aladdin smarter than competitors because it gets trained on information others never see. Retirement plans reveal another layer. BlackRock manages pension money for multiple government agencies while advising those same regulators. Security clearances add to the advantage. Many ex-government hires keep access to sensitive economic data when joining BlackRock. The scale is institutional now. Regulatory filings show BlackRock holds hundreds of official government meetings yearly. No other asset manager comes close. During the pandemic, they received emergency contracts without normal bidding processes. One congressional staffer noted, "When crisis hits, everyone reaches for the same Rolodex." This creates subtle power shifts. Former BlackRock staff helped draft banking rules they once lobbied against. Treasury appointees understand Aladdin's models better than government systems. The knowledge imbalance shapes policy in ways that favor existing frameworks over new approaches. Defenders point to disclosure requirements. BlackRock complies with all revolving door laws. But legal compliance doesn't address the systemic issue. When one firm employs both rule makers and rule enforcers, public oversight weakens. The numbers tell the story. 47 officials switching sides, hundreds of government contracts, trillions in managed public pension assets. This isn't mere influence. It's fusion between state and financial power. Wall Street veterans quietly question the arrangement. As one former SEC official put it, "We used to joke that Treasury had a BlackRock desk. Now it's not a joke." Yet alternatives seem impractical. Governments have become dependent on Aladdin's technology. The implications extend beyond any single company. When private firms capture regulatory knowledge, innovation suffers while incumbents thrive. Rules get written favoring systems already in place. Nobody voted for this system. It happened gradually, one hire, one contract at a time, until the alternative became unthinkable. That's how revolutions occur, not with protests, but with LinkedIn updates and consulting agreements. The $100 million mistake that built Aladdin created something its makers never intended, a private company that governments can't function without. Think about that next time you check your retirement account. The same people setting fiscal policy might be managing your money. The revolving door keeps spinning because both sides benefit. Governments get instant expertise. BlackRock gains market insight. Only the public sits outside this arrangement. watching as the line between Wall Street and Washington disappears. Corporate defenders argue this improves policy. Maybe. But it definitely improves BlackRock's position. The company that knows regulators best will always navigate rules easiest. And right now, nobody knows regulators better than their former colleagues. This isn't illegal. It's not even secret. But it does raise questions about whose interests get prioritized when crisis hits. In finance, the next crisis is always just around the corner. The quiet takeover of global finance is complete. All it took was one revolving door that never stops spinning. When algorithms outthink humans. Here's something that should blow your mind. Wall Street's top jobs are disappearing faster than middle managers at a tech startup. Aladdin already automates about 80% of what junior analysts used to do. And the scary part? It's getting better at the remaining 20% every single day. Let's talk about how algorithms are eating finance alive. Jobs reports tell the ugly truth. BlackRock cut 3% of its workforce last year, mostly in research and portfolio management. Meanwhile, their tech teams keep expanding. The writing's on the wall. Human stock pickers are going the way of elevator operators and switchboard attendants. The changes start small but add up fast. Remember when earning your CFA meant job security? Now Aladdin's algorithms pass those same tests in minutes. The system analyzes 10,000 stocks before most analysts finish their morning coffee. Humans can't compete with that scale, and firms are noticing. Credit decisions show where this is heading. Banks used to employ armies of loan officers. Now Aladdin's AI models approve mortgages in seconds using 1,000 data points, far more than any person could process. Same goes for corporate loans, credit cards, even complex derivatives. The machines simply see more. Trading floors look like ghost towns. Where hundreds of traders once shouted orders, now just a handful monitor screens. Aladdin executes 90% of BlackRock's trades automatically based on risk parameters. When the system spots an opportunity, it acts in milliseconds, no human hesitation. Portfolio construction got fully automated. Human managers used to debate asset allocations for weeks. Now Aladdin optimizes portfolios using machine learning trained on 100 years of market data. During the March 2020 crash, it automatically liquidated risky positions while human managers were still panicking, saving clients billions. The hardest pill to swallow? The algorithms keep learning. Every trade Aladdin makes gets analyzed. Good decisions get reinforced, bad ones get tweaked. It's like having a fund manager who improves daily without vacations or salary demands. No wonder executives love this. Even client interactions are getting automated. Aladdin's natural language processing handles basic investor queries. More complex questions get routed to human staff. But the AI handles about 60% of routine communication already. Those customer service jobs aren't coming back. The scariest part? The system builds its own strategies now. Early versions just followed human-programmed rules. Today's Aladdin spots market patterns no one taught it to find. One algorithm discovered that semiconductor delivery delays predict inflation better than government reports. Humans never made that connection. Corporate meetings look different now. Analysts show up with Aladdin-generated questions printed on tablets. The system listens to earnings calls, instantly flags inconsistencies, and suggests follow-ups. One CEO complained that the robots ask tougher questions than the humans ever did. Salary structures reflect the shift. Tech staff at BlackRock now earn 30% more than traditional finance roles with similar experience. Python coders out-earn portfolio managers. The message is clear. The money's in maintaining the machines, not stock picking. Client reporting got handed to algorithms. Those glossy quarterly reports? Aladdin generates them in minutes, complete with customized commentary. Performance attribution, risk analysis, even the executive summaries, all automated. The humans just approve the final PDF. The remaining humans face impossible pressure. Portfolio managers who trail benchmarks get replaced by algorithms that track them perfectly. Analysts who can't add value beyond Aladdin's outputs get shown the door. It's survival of the fittest, and the fittest are mostly code now. Some firms push back. A few hedge funds still swear by human intuition, but their performance is slipping. Last year, 78% of active managers underperformed the S&P 500, the worst showing in decades. Investors are noticing and moving money to cheaper, algorithm-driven strategies. BlackRock's own workforce tells the story. In 2010, two-thirds of employees had finance backgrounds. Today, over half come from tech. The company hires more data scientists than economists. When a quant dies at BlackRock, they don't replace him. They upgrade his algorithms instead. Client demands drive this shift. Pension funds no longer pay 2% fees for human stock pickers. They want cheap, reliable index tracking, exactly what algorithms excel at. The same clients pushing fees down are pushing automation up. It's a vicious cycle for human workers. The future of finance isn't humans working with computers. It's computers working with better computers. And at the center of it all, Aladdin, the system that ate Wall Street one job at a time. That $100 million mistake didn't just create a company. It created the template for the post-human financial world. And if you work in finance, you should be very worried. The ultimate financial cheat because the machines aren't coming anymore. Here's the thing about Aladdin. They're already here. Calling it financial and they're getting smarter while you watch. It's like calling the Death Star a flashlight. BlackRock built the ultimate financial operating system from a $100 million mistake, and now it controls more money than most countries. JP Morgan spent $12 billion trying to replicate Aladdin before giving up and paying BlackRock to use theirs instead. That's the pattern. Competitors burn cash while Aladdin gets stronger. The system processes more data before breakfast than most banks see all year. Satellite images, shipping manifests, even truck speeds at factory gates. While others stare at stock charts, Aladdin tracks Brazilian rainfall and North Sea winds. The genius is in the feedback loop. Banks pay millions annually to use Aladdin, and every trade they make improves the system. It's like Burger King paying McDonald's to use their grills while every Whopper made improves Big Mac recipes. That licensing business brings in over $1 billion yearly in pure profit. Clients can't quit. Switching costs would bankrupt them. Entire risk departments train on Aladdin. Reports format data specifically for it. Aladdin's processing power is terrifying. It runs 100,000 market scenarios daily, recomputes risk exposures every 15 minutes for $21 trillion in assets, and digests earnings reports before they hit news wires. Some hedge funds just copy its trades. Why think when you can leech? The irony is delicious. Larry Fink took Wall Street's ultimate humiliation, that $100 million loss, and turned it into his superpower. While rivals chased flashy trades, he obsessed over failure prevention. Now his boring risk software prints money while their genius trades blow up. Governments cemented Aladdin's dominance. When the Fed needed to value toxic assets in 2008, Aladdin. COVID corporate bond bailouts? Aladdin. Next crisis. Guess who's getting that 3 a.m. panic call? BlackRock hires more coders than MBAs now. Last year's layoffs hit human stock pickers while tech teams expanded. Here's what competitors miss. Aladdin isn't a product. It's financial infrastructure, like the electrical grid. Once that status locked in, the game was over. Even regulators use it to oversee. Well, itself basically. The revenue model would make a mobster blush. Charge clients to use the system, use their data to improve it, then use those improvements to outperform them. Rinse and repeat. That $100 million loss created more value than 100,000 winning trades could. By failing spectacularly early, Fink built something that can't fail now. The ultimate revenge on Wall Street's "what have you done for me lately" culture. Check your portfolio. There's a 60% chance BlackRock algorithms manage part of it. You didn't choose this system. Nobody voted on it. It just happened. One bank, one pension fund, one government contract at a time. Final thought. The best cheat codes come from finding glitches. Fink found Wall Street's glitch. It fears losing money more than it loves making it. He's been exploiting that for 35 years. That's not software. That's the financial equivalent of finding unlimited lives in Contra. And nobody's found the reset button yet. So here's the trillion-dollar question. Is Aladdin the hero finance needs, or a disaster waiting to happen? That $100 million mistake built a system now woven into the fabric of global wealth, managing pensions, guiding governments, and reshaping markets. The genie's out of the bottle. Aladdin keeps evolving, making decisions that ripple through your 401k and national economies alike. The real issue isn't its dominance, but whether we've truly reckoned with handing this much power to algorithms. How do you feel knowing this system might control your financial future? Drop your thoughts below. and hit like if you want to see where this financial revolution heads next.